This is our Forex blog for November 30th, 2011. And like most days, we really want to buy the strong currencies versus the weak, and we want to sell the weak currencies versus the strong. There's multiple. Anytime new traders think about trading with the trend, I want you to think about what time frame trend. You know, the monthly trend could be down, like you see in the New Zealand here. The weekly trend's up. The daily trend was up, even during the real-time trend was clearly down until about 5:30. So you have one trend down, the other one up, the other one mixed, and the other one down, and then up. So which time frame trend do you trade with? Mainly focus on the real-time trend, which shows up in histogram form on the top, and then realize that the other time frame, longer time frame trends can influence how long that trend's likely to last. For instance, the dollar. Extreme strength here at 1, way over the 80 level, which we consider extreme, and the daily trend shifted up, the weekly trend slightly up, the monthly trend's very strong. And so with your choice between trading the dollar and the yen to the long side, the yen has a weekly trend that's quite down, and the monthly trend is just barely up. So it's a no-brainer that you would rather, if you see two currencies that are strong, trade the dollar versus the yen. Now, on the short side, the euro, at 2 o'clock right here is extremely weak. Its weekly trend's down. That's the one I most focus on in terms of longer-term trend. The monthly trend can take too long to switch. If the weekly trend, like the New Zealand, is super strong and the monthly is down, then I'm going to go in the direction of the weekly. I could care less about the monthly. Monthly can take 1 to 2.5 weeks to change, whereas the weekly can usually switch directions within 1 to 1.5, 2 days of strong trends. It's very fast in switching compared to the monthly, which again, on a slow move could take 2 weeks to switch. And, even during intense, 2-3 days up in a row, it might not even change the downtrend to an uptrend. So without any doubt, the Australian is probably the strongest one on all time frames. And you can see here at 6, it had strength, 4, it had strength. So trade that one that's super strong versus the ones that are weakest. The weakest across the board is the Swiss. The daily trend's down, weekly trend's down, monthly trend's down. Notice when it had some strength right here, it didn't have much strength. So that when this weakness came in, there was nobody really buying it across all the different currencies. Here it's weak. The Australian is strong. And so focus on buying the Australian Swiss from 5 o'clock onward. Let's move some of these charts, which I've left up from yesterday. Here's 5 o'clock, and this currency is underneath the hourly moving average. This is one of our filters. Underneath the hourly, it's more likely to go down. Above the hourly, it's more likely to go up. Here's 5 o'clock. It just works its way back up to the hourly here and tries to go down. There's almost no weakness. This is as much of a no-brainer trade as you can find. And when it breaks out of here, you can see it shoots up from 92.27 all the way up to our upper containment band at 77. It's a 50 pip move. And anytime you have extreme moves like that where it makes a higher high, you want to buy the first pullback and usually the second. You buy this pullback here where there's no weakness and it goes back up and double tops. And then usually after double top, the market's either going to go sideways and then back up, or it's going to fall. And you got to watch the lows here. If it breaks this low, then more than likely that uptrend's over until it has a deeper pullback, usually to the hourly moving average down here. But in this case, it went sideways, and this is one of our second of our entry methods. When it breaks out right here, you go long. You always want to draw your fibs to get an idea of where your profit target is. And, obviously this is most likely a news release that caused this huge 75 pip move up. You might not have even been filled in it, but nonetheless, it shot up close to 100 pips. And with a range bar chart with the Australian Swiss, you can find trades that you wouldn't normally find on 5-minute charts. Let's bring this up. This is a good example right here. Australian Swiss. Especially during news times, you can take trades using our range charts. We have statistics in there that tell you how many pips per bar you want to put on here. And a range bar chart has nothing to do with time. After a certain number of pips of movement, there's a new bar. After the same number of pips of movement, there's another new bar. And so when news events happen, like at 8 or so, or 7:42, I guess, you can get into these trades very well. Notice the pullback right here. This on 6 pips per bar, you risk only 6 pips plus 1 to 3 pips padding plus your spread. And so your loss is the lowest amount ever. Here you got this pullback. It goes sideways for a while, breaks out, and notice it goes up, all the way up to 58 from your entry level here at 28, 30 pips. You're risking 10 pips and you made 30 on this. And by doing that, you can have the tiniest losses and you still catch, some astronomically big wins. If you get into a trade right up here at the high, you always never know if it's going to go through the high here. You're watching it as it comes up to the high, but you very quickly move your stop to, break even or plus. And then if it shoots through that level up here, you can move your stop up and you lock in 10 to 15, sometimes 20 pips on trades that really don't pan out. There it goes. And a lot of times markets, up near the highs will run out of steam and come back down. The whole numbers and half numbers tend to be major areas of where the market stalls and reverses. You can always, if you get into a trade right here at 93.41, when it kind of goes up and stalls, exit half your trade. But you can see you lock in 25, 35 pips on the first half, use a trailing stop or yank it back up here, maybe a few pips underneath this little bar here, and you get stopped out. And as you can see, you caught the move. Now, trends of this magnitude usually try to continue back up. So here's another great entry. Your stop loss is so ridiculously tiny for such a volatile currency like this. And as it goes up, you very quickly move your stop to break even. This one had every opportunity to go higher. It had a false breakout up here at the high. It made a lower low than here. So it's usually not likely to move, more than 50% on the way back up. So 83 is your profit target. Hit the first fib target right here and kind of stalled if you wanted to exit half your trade with 5 or 10 pips and kind of see what happens on the second half. And so you got stopped out. So, you have opportunities to make some money versus nothing using range bar charts. And it's really, one of the best ways of trading using our software. Later in the day, the yen, weekly trends down. It had a lot of strength. Here's the first time the weakness surpassed the strength, and so therefore the weakness is likely to continue if the daily and weekly trend are down, which they are. So at 5 o'clock, this is extremely weak. We already know that the Australian is one of the strongest ones. So after 5 o'clock, we want to buy the Australian yen too. It's a no-brainer. And so here's 5 o'clock. This one's underneath the hourly too. When it breaks out, you can see it shot up 50 pips right here, and you had another opportunity to buy this pullback right here, and it went up another 150 pips or so. Phenomenal trading using the currency meter, removes all guesswork, makes trading easier. You are going to have losing trades. You got to manage those. Move your stops, cut your stops in half once it moves 5 to 10 pips your way. Exit losses with as small a loss as possible, hopefully 5 to 7 pips on most of your trades, and try to scale out of your winning trades. If it goes 15, 20 pips your way and goes sideways, exit half, and then let the second half run. Sometimes you're going to give back profit on the second half, and other times you might make another 50 pips on the second half, which greatly enhances your trading profits.